purpose of this video is to help make sure that when you submit your bank statements as part of a loss mitigation review process, that they actually make it through the review. Whether you're applying for a loan modification, a short sale, a deed in lieu, or any sort of repayment plan, almost across the board, all servicers will want to see your most recent bank statements. They're using these bank statements to make sure that they have a comprehensive picture of what you have coming in and going out. They want to make sure that you don't have the available balance to just fully pay back the loan. And so it's typically required for every sort of loss mitigation attempt that you do. So if you have FHA as your investor, you're going to want to submit 90 days of your most recent bank statements. If you have a conventional investor like Fannie Mae, Freddie Mac, or private investor, you typically will be submitting 60 days of your most recent bank statements. Banks understand that the time periods that bank statements come out kind of vary. So you might have a conventional situation where your bank statements run from the 1st of the month to the 31st of the month. You might have a less conventional billing structure where your bank statements run from the middle of the month to the middle of the next month. So whatever your month is with your bank, that's fine. You really just want to submit the 2 or 3 most recent statements. So if you're applying in the middle of a cycle where your bank statement isn't necessarily generated yet, just pull the 2 most recent and that will work for them. A big problem that gets homeowners is this whole transaction history thing. So many of us, we log into online banking and we can quickly see 30 days worth of our most recent transactions and we can see our bank balance. A lot of people think, oh, I'll just, print this to a PDF or I'll send the bank my transaction history and that'll be good enough. Unfortunately, it's not good enough. Those will get rejected, those will slow down your review. You cannot send transaction histories in place of actual bank statements. Your bank statements are the ones that are generated only once per month. There's typically multiple pages long. On the front page, it'll typically have your bank's logo and your name and account number. They look very formal. If you have online banking, you can typically access your statements there. If not, you're gonna have to actually walk into your branch and tell them that you're needing your 60 days or 90 days most recent bank statement. So make sure you do not just print your transaction histories and rely on those. The other thing that can trip up homeowners with bank statements is the all accounts requirement. So banks, lenders need your bank statements for all of your accounts. A lot of times what I see is, people have a very active checking account. It's also attached to a savings account. The savings account maybe has a $0 balance, or there's some other checking account that has a $0 balance. And a lot of homeowners think to themselves, reasonably so, right? If I'm not making any transaction in these bank statements, I don't need to send them in. That's not true. Your servicer will see all of your open accounts when they pull your credit report. And so you need to think, do I have any accounts that are technically open, even if they're not being used? If they are open, there should be statements generated every month, and you should be able to pull the required statements that you need for each of those accounts. If you do not have bank statements, meaning you do not have an open bank account, it's not enough to just not send anything in. You still have to send a letter of explanation telling the bank that you do not have a bank account. Not having a bank account does not in and of itself necessarily preclude you from getting a loan modification or a short sale or a deed in lieu. So you do want to tell the bank something, and you have to tell them in writing. They need something to upload in their system to show that they've met the requirement of receiving your bank statements. So if you don't have bank statements, you need to write a letter telling them that you don't have any open bank accounts and you cannot provide statements. There's a link underneath this video to help you with some sample language if you're somebody who doesn't have a bank account but needs to kind of satisfy that requirement. My last little comment here about bank statements is you want to actually look at your bank statements before you send them in. Typically the general rule is any deposits coming into your account that are over $300 that do not come from income sources, meaning, so we're not talking about like SSI or your W-2 pay stubs, any other kind of random deposits that are over $300, that will kind of bring the review to a halt because the bank will want to figure out what those deposits are for. So you can push your review forward faster by telling the bank upfront this is what they're for. So once you have your 60 days or your 90 days of bank statements put together, go through each transaction to see if there's any big deposits coming in that you need to explain to the bank. If you need to explain it, you just write a quick letter of explanation and you say, hey, you tell them the date. On 8/21, there was a deposit for, let's say, for example, $400. And then you tell them what it was for. This was my son paying me back for repairs I paid for on his car. Whatever it is, if it's a one-time deposit, you do need to explain it. For those of you who have like a huge deposit, and I'm saying like, you know, let's say over $4,000 in there, if you have like a big one-time deposit, you really 100% need to explain it, but you also want to like think for a moment whether this is going to impact your income. Typically these big deposits are like one-time windfalls. Maybe you received some casino winnings, maybe somebody passed away and left you some of their estate. These are things I see frequently. But definitely make sure if you have a big deposit, you need to make clear to the bank that this is not a regular source of income. What you don't want to have happen is you don't want the bank to look at these cash deposits and think, oh, this person has their job and then every month they also receive an extra $4,000. That will cause your review to go weird, or it might think that you have more money than you do. It might look that you might look like you have more money than you have. So be really cognizant of what your deposits are showing. Littler deposits around the $300, $500 amount, explain them. Bigger deposits, really make sure you prove to the bank by sending in documentation that it's a one-time windfall. These tips hope they help you get your bank statements through the review. My other little last note is going to be sometimes loss mitigation reviews last for a long time, right? It might be 30 to 45 days as the underwriters look at everything. And so do your part in making sure your bank statements don't expire. So if you've sent in 2 months and then 30 days go by and the bank is telling you it's in review, help them out by sending in your next bank statement that generates. You don't want to get caught in this cycle where every 30 days they tell you, oh, we don't have 60 most recent days, and then you have to send it in and then they go back and review and then it expires again. So this is what I'll say for pay stubs too in the pay stub income video, stay on top of it and send in every 30 days your statement so that there's no chance that the banks can use expiration of documents as a reason not to issue a decision. If you are a Washington homeowner and you have questions about this video or need some help, give me a call.